Okay, it's Sunday the 7th of August, so let's have a look at the Ftse. So last week we began to see the retrace that we have been expecting for the past few weeks. And then we had, right here, we had UK rate decision, the rates were cut, and the next day we had non-farm payroll numbers out of America, which were a lot better than expected. Also with the rate decision, there is the potential for further quantitative easing coming out of the UK. Now, both of these things drove the markets up. The rate cut especially, it drove it up very, very strongly. A rate cut and also the potential for quantitative easing it's a bad sign for the pound. The pound will have been driven down and money will have been moved into the Ftse. So let's get rid of that. I want to go over the news releases also a little bit further, but first of all, let's have a look at this market. So things like rate decisions, they definitely can change directions of markets. So we have to be aware of that. It's exactly what I said to subscribers is rate decision, it's one of the only things that I watch for clues as to the market changing its overall sentiment. I was looking for a pullback, certainly down into the sort of 500s, more likely down into these sort of levels right here, which would have been sort of 455, 460 at a minimum. For me now, that analysis hasn't changed. It's sort of been paused until I see what the market is going to do, certainly next week. Now, the market is sitting where? I'm just going to mark it in. We're going to look left, and we're going to see a heck of a lot of resistance coming up. We're moving into very, very key levels. And then if we can break up again, we have more major levels sitting up in the the 870 up into the 900 levels. Both of these areas are very, very strong resistance levels. So although the market has broken up after these news releases, showing very, very strong bullish sentiment, thus far it has not gone anywhere significant at all. And these are the two key areas I want to watch. I want to see how the market can react. Start of the week, early next week at this level. If we do push up further, then from this level, for me, for the market to be bullish, we'd need to break these levels. We need to see a strong, clean break, good price action to push this market higher. Until that happens, certainly early next week, mid next week, I'm looking at these two levels for sell positions. If we drop into the 4-hour time frame, what you can see is the news release. It has been a bullish surge, almost completely uninterrupted. Tiny little pullback here, which was 4 in the morning until 8 in the morning. Tiny little pullback here, which was from 4 o'clock until 8 p.m. So basically both after market hours pullbacks. We are now sitting at the key level, which is what I want to watch. I also, next week, I am expecting some sort of a retrace of this huge move up. Some sort of a pullback, depending how strong this market is, into these levels, but more likely down into these levels right here. So 6,750, which has been a very key level in the market. Now, if we quickly look at the 5-minute time frame, what I want to look at is this price action. Now, I always advise people not to trade around the news. There are lots of traders out there, lots of companies out there who advise trading around the news. I've actually been to a seminar recently where a lot of their trading is based around the news. For me, it's a terrible idea. I never advise people to do it. I always advise people to sit out of the market, and I'm going to tell you exactly why. We already know about slippage, where your stop during times of extreme volatility can become completely useless. Now, let's say you're long this right here. You're in a buy position. You can see the price action down here. You quite likely could have gotten into a buy position down here. It's at a level of previous support, and the market has flown up. If we come back to, let's have a look if we can see any further spikes. No, let's just stick with this one. Okay, so you can see the market rockets up. Let's say you are in a buy position right here. Now we're talking about trading as a career. First of all, we're not talking about trading, as a beginner. We're not talking about trading as someone on a demo account or whatever. We're talking about you've been trading for years. You're doing it as a career. You're consistent. You're consistently making money. This is your income source. You catch this move. You catch this very strong upward surge. Lovely feeling. You get all these points locked in. Let's say you even get 70 points. You beat target completely. You make all that money. You get to the end of the month. You're up way further than expected. Maybe that's added an extra 5% onto your account. Now, as a full-time trader, what are you doing? You are living off of money. That tends to mean you either maintain your account at a certain level, or you allow your account to build by a certain amount each month, and then you remove the rest of the profits. The problem with this is you've removed those profits. Next time it comes to a news release, you're not so lucky. Next time it comes to a news release, let's say you're in a sell position here. You're waiting for the market to break these levels. You're still in your position. And then, boom, the market rockets up. This is a relatively strong move, but what you can see is it happening a lot faster than this, a lot stronger than this. I'm going to show you another example. Now, your account, instead of sitting up that 5%, has suffered an extra 5% drawdown. At the end of the month, your account, let's say, is now break even for the month after all the rest of your trading. What does that mean? It means you can't take money out of your account, or it means you're going to have to damage your account to take the money out. That is why it is not a good idea to trade around events that are going to be very, very volatile. They're going to affect your stop and make your stop useless. If you can trade news releases with guaranteed stops, I say bash on, absolutely. What you're going to find, there's a lot of brokers, they won't allow you to have these guaranteed stops in times of very high volatility. That's why I don't advise you trade it, because the profits that you make are going to come out of the account. The next time it happens, if you get on the wrong side of this, it's going to do a lot more damage. You can't trade looking for not small gains, but having a smaller outlook. Looking for the next trade. Oh, I just want to make money on this trade. You have to be thinking about it long term. Let's have a look quickly at something else. I'm going to look at the Swiss franc. We're going to go on to the daily time frame to make this easier. Let's just extend this up. I'm sure you can already see where it is that I'm going. Right here. Completely unexpected move this was, and it was enormous. This market, this was a news release, a news event, news related event, dropped almost 3,000 points. It actually did this in a matter of seconds, and when it happened, it came on the back of a very unexpected news release. Lots of traders got completely wiped out trying to trade this. They were going the wrong direction. They suffered slippage, but they've been trading news for, it might have been years, and it had never done anything significant. But one time it comes in like this, lots and lots of traders were wiped out. I actually seen a story about a school teacher who tried to trade this. He set his trade, and then he went to teach his class. For some crazy reason, he was long £100 per point. He logged on to his account after the lesson, and he was negative £270,000. That's because of slippage. He was on the line for that amount of money. I have no idea if the broker let him off with that, if they followed through and pursued payment. But technically, you are on the hook for that money. His account was completely decimated. Even if they had cleared that out, all the money in his account is gone. His ability to trade is now over. And also, lots of traders lost all of their money. That's the reason I don't advise trading news events, guys. It can be a very euphoric feeling if you catch a news event going the right direction. I used to trade the news. It was way back when I first started, the first couple of years. I did quite well out of it. And then I got stung on the wrong side of it. Instantly, I reevaluated what I was doing. I could see the potential problems, and I have never traded the news since. Okay, so hopefully that was helpful, guys. Bearing in mind it is August again, so we may see very low volatility. For me, I'm only trading the morning sessions for the rest of this month. That is exactly what I'm looking at, and I hope you all have a great trading week.